on one second. Let me get this recording. They are finally pricing in the Trump win. And what I think is so interesting about that, hold on one second. What is it? Zoom is pressing bypass. Okay, whatever. It is fascinating to me that they are just now pricing in a Trump win, which makes no sense to me at all. The betting markets, I mean, shoot, these last couple of elections, I think at this point, they just need to take the pollsters out and shoot them in the street. Like they're completely worthless. That Seltzer poll, 48 hours before the election, that said she was going to win Iowa by 7%. I mean, that she clearly just set her career on fire for no reason other than to scare Republicans from voting. I mean, it was absolutely insane. But I think Wall Street is just now pricing in what a Trump presidency looks like. If you're watching kind of the news, just to give you a great example, the Houthis, which, I mean, Trump wasn't even elected for 24 hours before the Houthis came out and said they're ending their strikes there in the Hormuz Strait. So the Houthis are done. Zelensky came out today and said, let's figure out a peace plan here. I'm guessing because he just figured out that we're not going to keep paying for stuff. And it also came out today that Jerome Powell would not resign as Fed chair if President Trump asked him to. His term runs through, I think, about May 2026. So Jerome Powell is going to be with us for a little while, and then by next year, he will be out. If you notice there, all day Tuesday, when we were watching the markets, I mean, the open the next day was up almost 4%. So it's going to be really interesting to see what happens here in the next 6 to 12 months. But a couple of things you guys should look out for. And I don't want to make this thing real long, just kind of my comments on seeing what's out there. It will be interesting to see what happens with rates. You can see they jumped up a little bit here in the last 24, 48 hours. Let me see if I can tighten this up a little bit. Let's say 11, let's say here 11.1. Actually, let's go back to the 31st. You can see rates jumped up a little bit there, but I think ultimately we are going to be looking at a reduction in rates pretty soon here. That's just my guess, but I think there's going to be the bond market is a little wonky right now. But whenever Trump presidency is risk on, and he has said before he wants a weaker dollar for exports. We want lower interest rates because that's the only way we can get the debt taken care of. So I really think that we're going to see interest rates come down. Is that going to be next year? I don't know. Part of the problem that we've seen in 2024, and at least it started in 2023, was inflation was running rampant. Part of that was energy costs, and he's committed to get energy to half in the next 12 months. He is going to have to step in and do something about insurance. I don't know if you guys have seen or have gotten your most recent insurance renewals yet, but we are already seeing apartments at 90 cents a square foot, which is absolutely bananas. I mean, you got to think you pay $2, $2.20 a square foot for a lease, 1,200 square foot place or 1,000 square foot place, runs you $1,200, $1,300, $1,500 a month. And 90 cents a foot is your insurance costs. It's absolutely insane. So Congress is going to have to step in and do something there. So we'll see what actually happens with insurance. Property taxes aren't going anywhere anytime soon, but the inflation impacts a couple of different areas, and so do interest rates. One is returns from insurance companies. As rates rise, they got to take on a little bit more risk, but they end up increasing your premiums because they do have to make a profit there. The storms that we had in Florida and Texas this year are going to be brutal on premiums. So that's going to be interesting. But if we can get these rates down, well, let me tell you the other bad. Everybody loves these tariffs on the right. Hey, we want to manufacture more stuff here. Sounds great. It's really going to depend on where those tariffs are directed. Most of our lumber comes from Canada. That's why we had such a problem during COVID getting lumber, because essentially Canada just shut its doors. And I mean, shoot, it wasn't until probably a year or so ago where they actually caught up with wood demand. But if you look at all of our finished products, in fact, I have a pile of 30 lights sitting over here, these LED lights that we're dropping off at our self-storage facility that we're rehabbing right now. Those could be substantially more expensive. Most of the stuff at Home Depot is kind of like a grocery store. The exterior of Home Depot, like when you walk in, the things on the exterior walls are like source materials, if you will. They're inputs for construction, and everything on the inside of Home Depot are finished products. And most of those finished products are made in China, as Trump says all the time. Oh, I was going to tell you a third thing. President Xi has already reached out. So we had the Houthis, Zelensky, and Xi have already reached out and said, "Hey, man, hope we can get along. Like, you know, we can get along together and not destroy our economy." So, um, my guess is China will play ball, but just keep that in mind for construction materials, especially finished products, may cause some serious issues as it relates to building and construction and renovation and that sort of thing. Interest rates, I anticipate those things going down. I have said since, shoot, 2022, late 2021, I think it was 22. I've said that any interest rate for a owner occupant with a 5 in the front of it is going to kick off a massive amount of home buying. And I would not be surprised if Trump jumps on the bandwagon of somehow incentivizing first-time home buyers. If you look at the statistics, who actually voted the president in is Gen X. It is fascinating. I could pull the data for you. I've just seen a couple of charts on it. I'm not publicly putting it all out there because we had just finished up counting votes this today, but it looks like Gen X is the one that actually voted the president. That's folks aged from 45 to 65. And I've said this on X a couple of times. I said, well, why did Gen X vote disproportionately to other generations? And I said, well, if you listen to Peter Zion, Gen X is the one that has gotten the absolute teeth kicked in. Most of us were one of the smallest generations. We graduated either high school, college, graduate school, into some of the worst economies in the history of the United States. Because of that, a lot of Gen X was not paid. They didn't have income compared to the boomers. They just didn't. Boomers would not retire, and Gen X was smack dab in the middle of the millennials. And until these boomers started retiring in the last 2 years, Gen X made nowhere near the amount of money relative to their parents' generation. And so that's put a huge amount of pressure on Gen X. They graduated with a massive amount of college debt. They didn't make as much money relative to their parents, and the price of housing has gone through the roof. So I anticipate with that large voting block between Gen X and millennials that we're going to see a lot of movement on how do we reduce the cost of housing in the United States. And of course, Trump is aimed squarely at energy costs as step one. And he's right there. I don't know if you guys have priced roofs in a while, but a good deal on a roof is like $225, $250 a square. Retail is like $325, $350 a square, which is absolutely insane. Hell, look at water heaters. I used to replace water heaters all the time for $600 for like a 30-gallon, and that same product now is $1,500. Another one is fuse boxes with the service mast. That whole service panel and the mast and all that. We could do that all day long for $1,200. That's now almost $2,500. So it is absolutely insane how some of these finished products have gotten. But we'll see what happens. Here's what I do know: rates have got to come down, and somebody's got to fix the insurance issue here in Texas. And I think if anybody is really focused on housing, and if these guys ever want to get a chance of getting reelected again, they're going to have to put up or shut up. I will tell you that. I'm not afraid to say I voted for Trump, but hey, looks like they've got the Senate. Looks like they're going to have the House, and of course they've got the executive branch. And the rumor on the street is he's going to get to pick somewhere between 1 and 3 Supreme Court justices. So hey, you guys have the keys to the kingdom. Like this didn't even happen. I mean, I guess Clinton was close when Newt Gingrich came in and had contract with America, so they only had to deal with the executive branch. But we could do some really great things in Washington, but we'll actually see. But that's all I've got for the update. Like I said, I didn't want to spend a whole bunch of time on this, but what I am seeing and hearing, and we'll see here as the Trump transition team starts to announce who's going to be where. But there might be a little near-term turmoil, but hopefully here in the long term, we'll see lower rates, some cheaper products, some better lending. Because like I said, I mean, everybody knows what a Trump presidency already looks like. And this time around, he's really going to have a run of the place, if you will. So I think there's more positive things to see out there than there are negative. But like I said, there's going to be a little bit of turmoil. But I think if we're seeing rates in the 5%, if we can reduce our energy costs, so our cost of goods and our make-ready expenses, construction expenses, at least abate by 15, 20%, we'll be able to return some profitability back to some of these deals. Hopefully we'll see a rise in incomes. I think one of the big misconceptions is, and I've heard this all the time, Jason, when there's a recession, lease rates go up, rents go up. And I said, I don't think I've ever seen that in any of the data. Increasing rents and increasing price of houses almost move together. You've got to have people with good jobs, good paying jobs, and demand in a marketplace. So if you've got a lot of demand for the rents go up. It's that simple. Where does that demand come from? It comes from people that are not buying houses that are moving into rental properties. It's very simple. And typically those are in times of prosperity. So I keep looking at the data to see if there's going to be some housing crash. I can't find it. We are well below. I think we are at 4 million homes. Let me pull it up real quick. Seasonally adjusted sales are somewhere around, let's look at pending. Well, this is pending home sales. Let's look at, actually, housing starts are going to be in the basement. If you look at housing starts, we are in recession lows. Let's just show you the 15-year. As a percentage of let's do building permits. That makes more sense. We are at damn near recession lows. It is absolutely horrible what's going on in the housing starts. Let's look at existing home sales. Take a look at this. This is the 15-year. We have not been in the 4 million range since the 90s. In fact, let's look at the last 15 years. When did it dip? Well, that's 2010. This is coming off of the recession, 2009, 2008. So we are selling as many homes now, in fact, fewer homes than we did in the great financial crisis. So when someone tells me, Jason, there's still a huge shoe to drop, there's going to be a massive recession and housing's going to crash, I'm like, we're already at crash levels for sales. And guess what? Prices keep going up. And oh, by the way, it's 2024, and we were talking about 2010. That was 14 years ago. How many more people live in this country compared to 14 years ago? Even if we get to 4, 5, 6% levels of unemployment, we still have over 130 million Americans working. So even if you have a big recession, we'll get to 115, 120 million working Americans, and the price of labor is at all-time highs. I just don't see it happening. There's another stat out there that, Americans have somewhere between 50 and 60% equity in their homes, and 40% of US homes are debt free, meaning are mortgage free. They don't have a mortgage. Hard to lose a house when you don't have a mortgage. What's Dave Ramsey say? He goes, 100% of properties that have gone into foreclosure had a mortgage. So hard to foreclose on a property if it doesn't have a mortgage. So this marketplace is going to be just absolutely crazy. This will come back up. You've got to think as a percentage, existing home sales as a percentage of population has never been this low in the United States ever. So we are already working off of the lowest sales volume in the history of US housing. So here's what I can tell you. There's so much variability in the data. There's so much just unknown in the data set right now. I can't make any decision one way or another. But here's what I can tell you. Trump is hell-bent on lowering rates. We are working off the lowest number of sales in the history of the United States, and prices are still climbing. So, and here's the other thing I know too. And I highly recommend you guys watch Peter Zion's video from a couple of days ago about Texas versus North Carolina. And essentially what he's saying is Texas is the best state for the next 40 years. We're going to continue to expand. The economy is amazing here. We're going to end up with our first spaceport with SpaceX down in Boca Chica. There's a lot of great things going for Texas. It's still going to be a job juggernaut, and that's going to continue to drive folks to move here and purchase houses and rent apartments and get into office space and all that stuff. So anyway, I just wanted to give you guys my thoughts. I don't really have any analysis tonight. Like I said, the data is still all coming in, but it looks relatively positive. If we can get rates with a 5 in the front of it, I think we are looking at some really great numbers. Is there a recession in the future? I don't know. Technically, housing is in a recession because it's shed jobs for the last 3 years between construction and real estate agents and loan officers. But I don't know if it can get much worse. I mean, like I said, we're already at the lowest sales per capita in the history of the United States. So I want to thank you guys for being on. We are doing more of these things. We are, I guess I can say, I'm really firing the webinars back up and the events. I really want to start doing a lot more deals with people. We had a lot of stuff that started happening at the beginning of this year that we just had to cut the radio show and the real estate education, all that stuff out because there's just so much crazy stuff going on, which I'll address at some point here in the next month or two. But we should be back on the radio. We're going to be teaching classes, doing deals. We have an event that we do up in the Woodlands at Boss Cat, if you guys are familiar with that. It's an absolutely fantastic place. And then we'll start doing events on the west side of town. You'll see one. I think the first one's in December. So hope to see you guys there. And I'll see you guys hopefully at these events here. And we're going to kick a lot of really cool stuff off at the beginning of the year. So thanks for watching.